All right, let's talk about Zillow's latest report about the housing market, where they basically say, hey, it looks like the housing market is shifting to a buyer's market. That's right, shifting away from a seller's market that we've experienced now for the past 4 or 5 years to a more buyer's market. So, what does all this mean? Well, we're going to get into the details of the Zillow report. We're also going to look at what this means if you're a buyer, seller, or investor in real estate, even a realtor in real estate like me. So, welcome to my daily housing crash update, where I update the latest in the housing crash, right? If the housing crash is here or the housing crash isn't here, you be the judge, but I just present the data. So, all right. The report I looked at from Zillow is about a heat index, a market heat index. And basically, Zillow looks at the markets across the United States and the United States as a whole and says, all right, where are buyers in control and where are sellers in control of the market? Now, a buyer's market is simply a market condition where buyers have more control than sellers. So they have more negotiating power, and sellers have less negotiating power. Probably prices then would drop, and days on market would increase, and buyers, generally speaking, will get a better deal. That's really what we're talking about. So the way Zillow looks at this is they look at factors beyond price. They're not looking at price in this report. They're looking at activity. So specifically, what they're looking at is three things. User engagement on Zillow's website. So how many people are actually looking at the Zillow website and searching for homes, filling out forms to get contacted by an agent, that type of stuff. So how they look at that factor, how active are buyers on Zillow's website. The second thing they look at is the share of for sale listings with a price cut. So how many listings in the market have an actual price cut? And the last thing they look at is the share of for sale listings going pending within 21 days. So I thought this was really interesting because they're not looking at sales, the volume of sales. They're not even looking at pricing. They're looking at activity only. And at the end of this video, I'll explain what that means for you if you're a buyer, seller, investor, in your market, and how you can kind of use this methodology to find out if you're in a buyer or seller's market. So the way they grade this is they have five different grades. They've got strong seller's market, a seller's market, a neutral market, a buyer's market, and then a strong buyer's market. So they've got those different grades depending on the heat index score. A higher score indicates a strong seller's market. A low score indicates a strong buyer's market. So that's how they grade it. All right. So then I looked at their report to find out, I looked around the country. I'm out of Ohio is where I live. And so I looked at some Ohio cities, but I also looked nationally at some areas that have experienced, I know some price declines and price appreciation this year, and found out, all right, where are buyers and sellers in control? And again, I thought this was pretty telling. So the United States is right now at a heat index of 52, which means neutral. So if you go to this report, it'll be in my description when I'm done here on the live. I'll put it in my description. If you go to the Zillow report, you can actually see where the heat index has traveled. And right now it's headed to a buyer's market. It's coming out of a strong seller's market and headed to a buyer's market. In fact, February of 2022, it peaked in the United States at 88, a score of 88. So that signifies a strong seller's market in the United States in February of 2022. But now we're in 2024, and the score is 52, which is a neutral rating. It needs to get to I want to make sure I get this right. It needs to get to a score of 44 in order to be a buyer's market, but it's definitely headed there. It's not going up. It's definitely going down if you look at that trend. But some of these cities, these metros, were completely nuts. Like some of these scores were nuts. And I'm curious what you think. Again, go to this link in my description because you can click around the United States and kind of find out, what's happening in your metro. But Columbus, Ohio, where I live outside of Columbus, Ohio, right now is a 52.9 heat index, a score of 52.9, which is neutral, right? Kind of like where the US is in Columbus. February of 2021, it peaked at 121 on the heat index. I mean, off the charts, right? So Columbus just, a few years ago was absolutely nuts in the housing market, as a lot of places were, but a score of 121. So we've fallen here in Columbus quite a bit, right? Fallen from 121 all the way down to 52.9. The lowest score I could find in the United States was Cape Coral, Florida at 32.8, meaning Cape Coral, Florida, they actually peaked back in March of 2021 at 77 on the heat index. Now 32.8. So they didn't peak as high as Columbus did, or as high as the national number, but they've definitely fallen further. They're fallen all the way down to 32.8. They're really not a strong buyer's market either. They're just labeled a buyer's market. So Cape Coral, Florida, a buyer's market. Austin, Texas, a buyer's market. Heat index score 40. Peaked at 152. Yeah, I thought that was high, right? So back in 2022, Austin was off the charts. And this is based on activity, not pricing, which I thought was good. I like the activity part. This one surprised me. It didn't surprise me, but the numbers were shocking. Hartford, Connecticut, 82 right now. So it's still a buyer's market. I'm sorry, still a seller's market in Hartford, Connecticut. Still a seller's market. It peaked at 112. So the spread between, the peak and where they are now, not that high, or not that great, right? Compared to Columbus, where it was 121. Now it's 52. Here's the highest one I could find. Rochester, New York, currently a 137 in Rochester, New York. Man, if you're watching this or you're watching the replay and you're from Rochester, New York, or you know someone there or you live near there, what is going on in Rochester, New York? What is up with the real estate market there? 137 on the heat index, peaked in February of this year at 215. And if you look at the graph, you can see the trend is not down. The trend is up. So Hartford, Connecticut is certainly, it looks like it's just going to keep going parabolic. And by the way, all of the strong sellers markets are in the Northeast, all of them. They're either in New York, Massachusetts, Connecticut, Rhode Island, Pennsylvania's in there. So the Northeast dominates when it comes to the housing market, at least from the last few years. You can just see the numbers. The Northeast is crazy. So Rochester, New York, heat index 137, peaked at 215. That was the highest I could find in the country. So all the sellers markets are in the Northeast. I already said that. All the strong buyers markets, or all the buyers markets, are actually in the Southeast. There were actually no strong buyers markets at all in the country yet, but a lot of buyers markets, and they're all in the Southeast. They're all in Florida, some in Texas, some in Georgia, some in Louisiana. I think New Orleans is on that list. Obviously, a lot of Florida metros in that list. And if they're using activity, given what happened with the hurricanes in the Southeast, I mean, if Zillow's using activity, I would expect this heat index to drop off the charts in the Southeast in the coming months as they do more of these reports. Most of the metros I looked at were neutral. So most are neutral markets, meaning really no buyer or seller is in control, but it's definitely headed to a buyer's market. There's no doubt about it. And again, I said this before, but there were, I think I already just said this. There are no strong buyer's markets, only buyer's markets in the United States right now. All right. So what does this mean for you? Well, if the market's definitely changing. You have to know that. I think there's a lot of realtors out there that, not just realtors, but people in general, home sellers probably too, that are like defiant, right? Defiant about the housing market. Like, this is not going to crash. It's not going to change. It's going to go parabolic forever. Well, most markets don't operate that way. And the housing market is no exception. So it's definitely changing. You can just see it in the activity data. So if you're a buyer, seller, investor, realtor watching this and you want to know what to do with this data, I would go to your metro market in the Zillow report, and I would look at that and take it with a grain of salt, though. as a starting point for your market and understand as a whole what's going on in your area. Are you headed to a buyer's market where buyers probably have a better opportunity for a price cut and negotiation, or are you still in a strong seller's market? Where are you? And understand that and have the correct expectations, then take that knowledge and kind of Zillow's methodology and dive into your local housing market. So you could get with a realtor to get this data. You can get it on Zillow, depending on where you live. You can get on Redfin sometimes. You can get it from realtor.com. There are a lot of ways to get the data, but I would grab the data in your local market and figure out what's happening with the activity level where you live. Are houses sitting on the market longer? Are price cuts more prevalent? And do it for your price range and the type of asset you want to buy. Don't just look at Zillow or drive by houses and go, look, it's still on the market. That means it's a buyer's market. No. Make sure it's in the asset class and the price range you want to buy. If you're buying a $300,000 house, looking at $1 million homes that sit on the market for 2 years, that's not going to help you. You want to look at $300,000 homes in the zip code, the school district, the neighborhood, the subdivision you want to buy in. So look at that on a weekly, sometimes daily basis if you're really into the data. But track that information locally on a Google sheet, on a pad of paper, whatever you got to do, and look at the trend and see where it's headed. Are you headed to a buyer's market? Are you headed to a seller's market? Are houses sitting longer? Are they moving faster? Are price cuts more prevalent, or are price cuts not as prevalent? And that will give you an idea. If you just look at that info on a trend, you'll be able to see what's going on with the market. Are we adding inventory? Again, this concept that Zillow has, I really like because it doesn't use their Zestimate. It doesn't use their fancy algorithm for prices and values. It just says, where is the activity slowing? Where is the activity gaining? And then it makes a call as to what the heat index is. And I think that could definitely help you in your local market. I mean, this is what I use in my local market is activity. I don't use, where the price is at compared to last year necessarily. I look at the asset class I want to buy in, the price point, the neighborhood, and then I look at, the activity level. So I think that's something that we can get from Zillow today. And will 2025 collapse? The housing market collapse? Will buyers continue to be in more control? They could. I can tell you as an agent right now, doing open houses every weekend, it's definitely slow. It is. Now, there's business out there to get. There's no doubt about it. Somebody's always buying and selling real estate. So, any agent that tells you that they can't find opportunities is not doing the work, quite frankly, because there is business out there to get. But overall, it is definitely slower. It just is. Buyers are more choosy right now. Houses are sitting longer, and price cuts are more prevalent. So I would say this index, as far as I'm concerned, when I look at the number for Columbus, I think it's right on the money, and it's probably more of a healthy market, I would think. But I'm curious to hear what you think about this heat index, and I encourage you to go to the link in my description. I'll put it in here in a few minutes after I'm done with the live. And thanks for joining me today. This is my daily housing crash update. I try to do this every weekday morning, except Thursdays when I do a big Redfin deep dive live in the morning. But thanks for joining me. We'll see you tomorrow on the next housing crash update.